Hello everyone, welcome back to the Velocity channel where this is your bridge to financial freedom. Today we have a different type of loan that we're going to be talking about. A lot of you have already shown interest in getting funding. Many of you are already getting funding for your business, your real estate investments, whatever you have going on there, because you see the vision, you have the cash flow, you're wanting more cash flow, and that's why you're getting the funding. So I wanted to go ahead and address how we pay off those business loans with what you have. But before we get into that, I want you to like, share, and subscribe so that everyone around the world can know the power of Velocity Banking, especially if they have a business, okay? Now, when we're talking about loans, listen, you're gonna have to remember this, okay? That they're gonna come with interest rates. They're also gonna come with split payments, right? Meaning part of this payment, the minimum monthly payment, is going to the interest and another part is going towards the principal. Our part is to make sure that we are using whatever we have, whether it's our checking, our savings, our line of credit, any account, that we are using it to our best advantage so that our money can be used optimally, okay? That's what we want. And so, of course, there are some of you that have the Money Max account, so you don't have to worry about this. What I want you to do is I want you to picture you getting $150,000 in business loans, all right? In a business loan or even a business line of credit. And then I want you to see yourself in a business. Why? Because a business, having a business, is the #1 tax strategy, at least in America. All right. Shout out to Mark Kohler, the CPA and attorney. All right. That's what he says. And if you're paying the $2,500 each and every month, they're also giving you some incentive. All right. Let's say that 0% lasts for the 2 years. Let's take advantage of that. Okay. Now, $400, because we're talking about a business loan, let's just say the $400 is your cash flow because you got the business loan. Now, does this $400, could that affect the minimum monthly payment? Absolutely. But how does it affect it? Could it affect it positively? I would think so. $400 is coming in because of this business loan. And oh, by the way, as the months go by, as the years go by, this number is going to go up. Instead of simply having a personal loan or an auto loan that's just going to drain you each and every month, a business loan is increasing your cash flow. Listen, positive cash flow is a good thing. But oh, wait a minute. Not only are we flowing positive, but we also have a line of credit that we can use to pay this off. Now, CJ, what if I have a business line of credit? That's what I'm talking about. Don't limit yourself. I believe that you can do it, all right? Now, what are we going to do with the $10,000 that we have? Of course, we're going to go ahead and deploy it towards what? The principal of this business loan. Now, I like not commingling funds. So I would definitely suggest that you place the $10,000 from your business line of credit towards this loan so you can knock it out, all right? And then let your revenue, right, flow into your business line of credit. Do you see that? Yeah, we're separating it, guys. Let's go ahead and separate the personal from the business. Now, is there a way that you can lend yourself the money from your business and kind of help yourself out of personal debt? There is a way to do that. That's another video for another day, okay? But we always want to make sure that we are separating the personal from the business. So as you continue on, right, to pay this loan of the $2,500 each and every month from, right, from the line of credit, what's going to be happening? Because you're still getting paid from the business, how are you going to allocate this money? So from the business, okay, the revenue that comes in, and this is just a suggestion, let's have it go towards there. Do you have business expenses? Where are we going to pay that from? From the business line of credit. Okay? Now let's say at the end of the day, you have $2,000 in cash flow. What is going to be paying this off? The $2,000 in cash flow. Okay? So let's go ahead and place this $2,000 here. Remember? Because in order to see how long it's going to take to replenish this $10,000, what do we need to do? We need to divide it by the cash flow. So in this case, $10,000 divided by $2,000 is 5, okay? So that's going to take you about 5 months to pay off that line of credit so that you can deploy it again. Where? Towards this now, right? $140,000 loan. Now, remember, they've only given you 2 years. So you've got 2 years to pay the $150,000 off. During this time, you are still paying the $2,500 each and every month. Remember, that is getting divided up. But there's something that's different about this loan than all the other loans that we have gone over. Do you remember what it is? That's right. It's the cash flow. Where is the cash flow going in this case? Can it go towards the $2,000 that you have? Remember, we're separating it. That's why we pulled this, okay? Remember, we're separating the personal and the business, and we're keeping them separated. Kind of like whites and the washer machine, okay? We want to separate them from the darks so that there's no mixture there for the whites and things are orderly. Does that make sense? And so personal and business are going to be separated. But look at that. That $400 can work for us. And what is it doing? It's giving us a faster pay down, because the bigger your cash flow, the faster the debt pay down. And that's what we want. We want to pay down this debt as fast as possible, even though we know it's a good debt. Okay? Now, let's go ahead and see if we even need to pay this down, shall we? Let's divide 150,000, because you know what I'm going to do next, don't you? I'm going to see if this is an efficient loan or an inefficient loan. So watch this. Divided by 2,500. And I'm going to go ahead and give you the answer to this right after this. Let me do the calculation. All right. So this is actually, it comes in at a cash flow indicator of 60. So it is still pretty inefficient, but it's not as inefficient as an auto loan, right? And plus, it's yielding you cash flow. So we definitely want to make sure that we're paying that down so that we can capture this cash flow. Now, the $2,500, of course, they stuck us in here for 60 months, $150,000 at the 0%. We've only got 2 years for that 0%. And then there's going to be, let's say, a 10 or 12% interest rate tagged on to that. That's okay. You know why? Because as you are hammering away the $10,000 at this $150,000 loan, oh, by the way, as your business is increasing, you're getting more revenue in. This cash flow number is going up, right? Let's just say to $1,400 after maybe a year. What is it going to do to this number in the cash flow? It's going to increase it. So now you're at $3,400. So now when you deploy that $10,000, you're going to have an even quicker session, right, of paying it down, because as that cash flow increases, that debt decreases very rapidly, okay? And so it's just simple math, folks. If you want to take a look at this, if you want to see if you actually qualify for the 150, even $250,000, $250,000 at the 0%. Of course, it's going to be limited time on that 0%, right? They've got to make money too. But now you know how you're going to pay that off, Make sure you're doing things according to plan, okay? First, before you get this 150, you got to have a plan to know what to do next, because this is not a personal loan. There are people all over the place. You guys are getting funding out the wazoo, and I'm glad that you already have a plan. You've got the Money Max account. You know which numbers to look at. If we look at this, the same principle applies. We're going to make sure our cash flow is yielding for us, whatever that number is for you. We're also going to divide it by the line balance to see if the time or the velocity term is good for us. 5 months to pay off $10,000 is great. We're going to go ahead and make sure that with the line of credit or with the checking account or with the savings account, whatever it is, whatever your deployment account is, remember, you've got to take out the principal. And when you take out this principal, it doesn't matter what the interest is, because the smaller the principal, the smaller the interest, okay? We want as less money as possible going to them and the most money coming to us. Folks, if you want to get funded, please go ahead and let me know. You can join us this Tuesday to make sure that you are doing all that you can with what you have to pay off that debt, because we're getting people out of their homes, the auto loans, in as little as 7 to 10 years. And we're doing that by a system, all right? I want you to have this system as well. So go ahead, I'm gonna get out of the way so you can take a screenshot of that. Remember, you're gonna be splitting up the personal and the business. We went ahead and we went to the principal here, which is $150,000. We divided by 2,500 to see if this was an efficient loan. It's not that efficient of loan. It's in the caution zone, which means you can restructure the loan, refinance the loan, but we still want to pay this loan off. Why? Because we want to capture the $2,500. Remember, this is not just any cash flow sucking loan. This is a business loan that we are using to make sure that we have that cash flow and that cash flow increases. And remember, having a business is the #1 tax strategy in the world. This is how business owners don't have to, they only pay what they need to, all right? They're not getting fooled because they've seen the light, all right? So folks, please let me know if you need help. God bless you. We'll see you in the next video.